Harvey Jackson here from Producer Profit. Just going through numerous news items over the weekend. Tariffs are still getting talked about a lot. But let's just start off with canola and the Futures Focus report. Canola crush so far this year is 7.79 million metric tons, which is, let's call it, not just shy of a 500,000 less than last year, or more than last year. And the exports are at 5.9. And eastern shipping lanes are starting to move quite rapidly, actually. Don't know what's getting loaded out there. CGC data is not the clearest as it gets. It's basically like a shuttle train going out there. May canola, when I saw it was 188, but we'll see that in a bit. Bearish factors, the tariffs are still on oil and meal, and we'll look for forward selling opportunities if the market gets a little higher here, of course. This was last week, and just if we can, I think we can enter long anytime here because the market was a little bit lower, but long futures and exit at 698, and if the market pulls down to 620, you get out. U.S. companies most vulnerable to Chinese retaliatory imports tariffs. And it just goes by sector here. The planes, one of the most impactful, and then semiconductors as well. And then lastly, the farm equipment and agriculture being listed. Anything that I'm pointing out specifically, of course, but things are going to get more expensive when it comes to these sectors for sure. Greece expects EU response on U.S. tariffs. Economy can withstand challenges. But you can see even in this last statement here, exports of the United States represent about 4% of Greece's total exports, and the tariffs on products such as olives, olive oil, and genuine Greek feta cheese cannot be produced in the United States, and we're not sensible to put the tariffs on. But yeah, whether they will or not, because you can't get these olives and olive oil. So it's pretty hard. So this is, all the tariffs are having an impact here, but Jerome Powell started talking about a Fed put, and which means he's not going to be doing anything, trying to put a floor under the inflation that's going to come up. So here's a pretty good visual of the inflation rates and just the different measures. You get CPI, core PCE funds, holy smoke, but you can see the trend is the same. But here's the funds rate is basically went from zero and started to decrease. And what does that mean? The households and companies have to adjust to higher prices in the slowdown, and the situation is not the same as the 70s, even though I can see that it could very well be, but I think they want to reiterate that. But it might not be. It could be a little bit nasty for them anytime soon here. Here's some crude oil exports for the last couple of months. Meant to pull for the crop year, but you can see that in February, China still bought 70,000 pounds or metric tons of crude oils, but they've bought up to 120 of the canola crude oil as well. So it's pretty impactful. When we look at the meal, so this is the meal done by quarter. So they've been fairly substantial buyer even up into February. And now they've basically shut themselves off here. So and this is the U.S. on this side and China on this side. So they're taking themselves out of this market. Karen Stroud just had a quick visual for you to see where does the soybean demand come from. So crush makes up 51%, China makes up another 25%, and the other basically 25% is non-China exports. Here's the share of U.S. Production exported. So just by looking at that, cotton is fairly expensive, hides, skins, tree nuts, and then it goes all the way down. But this is, I'm going to maybe point these out. Ethanol, your biodiesel, your soy meal, like some of these it doesn't seem to be a big share, but I would imagine with cheaper prices will actually drive this in here. Commitment traders, very little change on canola. There's been a reduce of position in corn and soybeans. Those are probably the major ones that we want to talk about. Trump touts lower grain prices. Oh yeah, he's taking credit for the world economy going into chaos. Oh, good for him. Canola down 9.90, rapeseed down $6. It started off the night only down $1, but it started to accelerate. So hopefully when the Chicago opens up, that things can get maybe a little bit better balance. But you've got the crude oil at $60 a barrel, and diesel fuel as low as it's been. Soybeans are holding up at 1.25 cents. And wheats are both sides of trading, but on the positive at the very least. So here's canola. It might be, hey, take profit if we're in that long position on the front month. On July, it's pulled back to the point that we want to go back in. We're at the 617. Now, how far back will it pull? You definitely want to put a stop in here somewhere, right? So we just have to reevaluate that one-on-one, I guess. November, same idea. Looking for to get back up to these values, probably to get some more consideration of some more sales anyway. Rapeseed trading at $510, and the differential right now is 183, I think. Yeah, 183. Sorry, looking on a different screen. Soybean oil, it's taken a pretty good dive here along with the crude oil. Palm oil, same thing, but it's still at the top end of this range. It didn't pull back into lower ranges here at all. Here's your West Texas. We haven't been to these values since April of 21, but we're trading right at some of these lower values that we saw in October. And if we look at the diesel fuel, it's the same idea. It's not since September of 21 we've been at these values. Soybean price itself looks like we're trying to get to full retracement that we've made there, but long candle that we had yesterday or Friday, and a little bit of a green from its lows that it made there. And if we look back to see what does that look like, it's been a pretty long slide down, lower lows, lower highs. And if we look at the meal, we've had these values back in mid 2020, but if we break through those values, we haven't been as low as this since May of 16. And if that were to happen, then they don't. China really doesn't need our canola meal. They can just buy soy meal from the world market and replace it pretty easily. Canadian dollar back into this range. Basically looking for some downside, I would expect, as this Canadian dollar keeps falling apart, or the crude oil falling apart. If we're actually going to trade a petrodollar, we should be going down. Like the amount that the fuel has dropped in the last few days, we should be going down for sure. Quick look at wheat. We're just a little wee bit up, but the moving averages are above these trading ranges, and we're at the bottom end of these trading ranges on wheat. Same thing on Kansas. And milling wheat, looks like it's come back up, but it's still pressured down from these moving averages as well. Corn hasn't had that same fall apart. Been trading basically sideways since March. Here's your live cattle. Pretty bad day that we had over there. Had suggested putting floors in, buying puts or just going short futures there. And this is the live cattle August. It's suggested putting in going short futures just at the 291 or something in there, and take profit down here. But hey, world economy is maybe pulling this apart just like it's pulling the crude down. April 10th, there's going to be a USDA report.